Okay, so our presentation is Lordstown Motors Executives Resign, and this is by me and Owen.
Okay, so a little bit about Lordstown as a company. So they went public last year with a merger with Diamond Peak Holdings Corporation, which is just a company with the purpose of merging with another company. As valuations have risen with other companies that have gotten into the electrical car market, like Tesla and NIO, a lot of investors have been piling into kind of the smaller companies to get ahead of the trend. And with that, Lordstown raised $675 million in its merger last fall, evaluated at $1.6 billion.
But they hadn't produced any vehicles.
Nope. At this point, and still to this day, they have not produced any sort of profit or revenue.
Okay.
Lordstown has they acquired one of the closed GM assembly plants to do their manufacturing. And their first released vehicle was going to be the Endurance, a electrical truck, and it was supposed to be released in September of 2021 at $52,500.
Is that even in the range? And I'm just thinking at 52.5 seems awful expensive for a.
Yeah, it's a little on the pricey side, but I know some of Tesla's cars get selling for like $30,000-$40,000.
Okay.
So Lordstown's CEO and top financial leader did resign after they made a new report and by the board committees. Angela Strand is now like the CEO temporarily of the company. And this was due to the inaccuracies in parts of the company's disclosure on the truck pre-orders. Their stock fell nearly 19% on Monday, and that's 54% like on this entire year, closing at about $9.26 a share, the largest drop since the company became publicly traded. So belief is that Lordstown Motors won't be able to establish itself in an increasingly competitive market for the electrical vehicles. And Lordstown Motors posted a $125.2 million net loss in its first quarter of 2021, with no revenue coming in, has run up an accumulated deficit of $259.7 million.
So they had a valuation of 1.6 billion, but they just lost money. Okay. So yeah. What was the premise that they'd be worth $1.6 billion?
They were kind of evaluated based on the success of other electrical companies, and the investors were buying into all the hype of, say, Tesla, primarily, along with a few other companies. So not just Lordstown, but a lot of investors have been jumping into this market early on, and they've started to pause on that, and we'll get more into that in the next slide.
One more thing is like the government is trying to support the electrical like cars and finding more efficient ways of like doing transportation. So Tesla actually works with the government to like got money to support its build of the company, and Lordstown was hoping to do that, but due to the deficits, they don't think that they'll actually be able to get that money. So I think that was incorporated in that 1.6 that you were talking about.
Okay, now we will get into the vast problems with Lordstown so far. So first of all would be their disclosures that they made about the pre-orders of their new electric truck were very inaccurate. So first they told investors and people who have given pre-orders that the launch date for the Endurance would be September, like we mentioned before. And now the projection is about December, if not January of 2022. And also they projected to be able to build about 2,200 trucks at launch. And that number is far down, almost cut in half to 1,100 trucks. And building on that, they said by year end they would have about $200 million forecasted, was the forecast in March that they would have money at year end. But now in May, they claimed it would be about $50 to $75 million, which is significantly less.
Okay, let's back up. So their plan was to do 2,200 vehicles in 21?
Yep.
Or 22?
It was September of 2021. They were planning to launch 2,200 trucks. And now that was in March. They gave that evaluation. And then in May, they released that they don't know if they'll be able to get the September launch date. And even if they do, it's going to be a maximum of 1,100 trucks, cutting their original projections in half.
So they disclosed that 2,200 to the public?
Yep, in March.
And had some pre-orders too.
Okay.
So they still don't have enough cash on hand to start their full commercial production, even though they got that $625 million before the company even launched. And then building on more problems, they claim that a lot of these inaccuracies in their financial statements were due to weaknesses in internal controls, which led to material misstatements. Lordstown Motors disclosed that it conducted an evaluation while preparing its 2020 financial statements and concluded that the substantial doubts as to ability to continue as a going concern in 2021. And building on that, the company will need to raise about $2.25 billion just to remain solvent through 2025, which is when they are projected to start making profit. And they've already saw a $125.2 million net loss in just the first quarter of 2021. And like we mentioned before, they have no revenue coming in. The company has already accumulated a deficit of $260 million in 2021.
Wow. That's a lot of stuff.
Mm-hmm. A lot of problems.
Yeah. So what does this mean? So Lordstown Motors is drawing scrutiny over whether they're going to be able to deliver on what they had planned and pitched to Wall Street. The leadership changes are the latest in a series of setbacks for the company, and the news sent its stocks sliding. And like I had said earlier, it's down 54% this year. The electric truck maker has disclosed received 2 subpoenas, and it said it was cooperating with the inquiry. So that's just another setback that the company will have to face. Lordstown Motors said it didn't have any current customers or pending orders. There's no assurance that the 100,000 plus non-binding pre-orders would be converted into sales. And Lordstown claims that the delay in release date is due to the insufficient cash caused by higher than expected costs, pandemic-related expenses, industry-wide supply chain issues, and outside engineering support.
Did they disclose that these were non-binding?
They did.
Interesting. Matt, if you're looking at this, why do you think an investor would want to invest in this? Just listening to what you heard.
Honestly, I'm not sure. Maybe maybe they have some sort of patent or some sort of technology to give them a competitive advantage.
Okay.
But really, I don't really see much that's going for them right now.
Yeah.
Yeah, really, they raised an evaluation before they even started producing or anything. That's why they didn't have the problems faced, because how the market's been doing, especially with Tesla. But now a lot of the investors are realizing the mistake that they made, and a lot of them are backing off of not just Lordstown, but the entire in general.
So go ahead.
So why does this all matter? So Lordstown will not be able to scale up to full production without raising more capital. So they originally raised $675 million, and they're not even going to be able to fulfill their original projections of 2,200 trucks without raising more money. And Lordstown is way behind schedule with both their cash projected and the release date, like we mentioned before, which was supposed to be in September, which is causing questions to the legitimacy of the company. And belief is that the company will not be able to establish itself in an increasingly competitive market.
So with this, it also brings into question the legitimacy of other companies that are starting up like this and following a similar process, and highlights the difficulty for startups trying to break into a capital intensive business.
Do you think, and this is a question everybody can go through, do you think the CEO and the former CFO knew those weren't mind orders and deliberately misled the public?
I guess I could comment on that. I as soon as probably about halfway through, I just it kind of came to my mind, like the Nikola debacle from the beginning of the year, where it was pretty obvious that they misled the public. It kind of feels similar to that. just making wild claims to draw, a lot of capital in the hopes that that would then make them be able to do something. So that's what it looks like to me, at least.
Interesting point.
So what we got on it was that the company believed their claims in the beginning, but the only reasoning they provided to the public since then is that they went through cash too fast. And the reason was because of the higher than expected costs on the COVID expenses, the industry-wide supply chain issues due to COVID, and then outside engineering support.
It seems like an awful big burn of cash very quickly, unexpectedly.
Yeah, they went through so much cash so fast, and they kind of really weren't responsible with it. And now they need to raise so much money. And like I mentioned before, they got to get at least 2.25 billion projected by the company itself just to remain solvent through 2025.
So I have a question. Was there anything attractive that made this, that baited investors to put money in this company in the first place? Like, what did they exactly claim?
So
what was exactly attractive about it?
It was nothing with the company. So the company was just a startup. They just got done with their merger, and they haven't even started production. They hadn't gotten the GM assembly plant. It was really just on the market and investors taking a risk on smaller companies, kind of with the upside that they would turn into the next Tesla.
So the fact that it wasn't just the huge name brands such as Tesla, that they're hoping the smaller company would potentially succeed and compete with them.
Yeah.
There was a claim there that COVID caused prices to rise or something like that, which made their valuations of their materials kind of go off. And I think that's honestly kind of BS, just because prices didn't rise until like 2021, right? I mean, prices didn't shoot through the roof for a lot of these raw materials through 2020. If anything, there was slightly like disinflation in a few, pieces of material, or at least inflation was flat. Like you didn't see quadrupling in the price of products last year, which so I don't see how that claim makes sense.
Yeah,
really.
I think companies just using the pandemic as a scapegoat to not come out and say we were irresponsible with our money.
Yeah, I agree. I think that they just put the pandemic, like Owen said, in there. But the reality was they just were not planned. Like they did not have the system that they needed to produce these vehicles.
Yeah, and then they have they blame the supply chain, but if they're not ready to produce, they don't have anything in the supply chain, do they?
Exactly.
No.
And they haven't even started at this point of the year. They haven't even started production yet. That's how behind they are, and that's how much cash they've burned through already.
So I have a question. Was it only their CEO who stepped down after all this came out, or were there
CFO as well?
Okay, I was just gonna say, because I just feel like there are a lot more people involved. Like that's another thing, the lack in trust that they've lost in the public, or rather that the public has lost in them. I feel like it would warrant a whole new board almost.
Yeah, and the CEO and the CFO wouldn't just step down if this accusation wasn't material. They obviously knew that this company was heading in a downward spiral. And since then, the company itself has just kind of been lost without them. And even their stock market, like we mentioned, has plummeted.
So they haven't done like a press statement about who might be stepping back in their place, or are they thinking about disbanding the whole thing?
Nope. So the only thing haven't done any press releases. The only thing was Angela Strand is the temporary CEO, kind of the acting one, until they can look for a new one.
Okay.
So it was really people were making statements that clearly we might assume that they knew were not correct.
They were making statements off of basically projections with no evidence, what they kind of thought they could do without even starting the company yet.
Okay.
And they made these predictions based on what other companies similar to what they were doing were already successfully doing. So I think that they just thought, with the reference to Tesla, that they could pull all these investors because they were hoping to succeed as Tesla did. but they didn't have the structure that they needed.
And now it's really hurting the market. So it's not just Lordstown. All these investors are realizing kind of the difficulty of just not only this market, but of a startup in this market. And a lot of investors have seen what's happened with Lordstown and don't want to invest in similar companies at the same state as Lordstown because they don't want the same thing to happen to them.
Okay. Nick, you had a question. Well, go ahead and ask your question. I think it's a good question.
Yeah. So we saw some very in the dot-com bubble in like the late 1990s, early 2000s, we saw like similar wildly speculative buying of tech stocks. I mean, and I guess you could say that like a similar phenomenon happened with some of the electric car manufacturers, or like some things that were sold tech stocks, maybe a little different in 2020 and 2021. And I guess you could draw some similarities between the two in terms of people just like just throwing money and at stuff without any kind of analysis of a company, just like expecting money to magically appear. I don't know. I don't know. It just seems like there's similarities between the two.
Yeah, I think this is definitely a market of the future, but I think people kind of took more of those Reddit stock style approach. They kind of they built on the hype and they got in early before the company had any sort of real evidence to their projections to back them up.
The other thing, and if you go back and look at historically, the dot-com bubble was startups who they hadn't really started to do anything. Mm-hmm. And so the valuations were based on thin air, but that stopped after a while as companies remained private before they went public. So that when they did go public, after they had been in business 5-6 years, they had a track record. You knew what they could do and what they couldn't. Facebook is a great example of that. They were private for quite some time before they went public, but they had a track record. You could do some forecasts around them. Here is just...
Yeah, it's exactly the opposite. As soon as they merged with Diamond Peak, they came public. And I know, especially reading this number surprised me. $675 million drew out investors that they were able to raise at a $1.6 billion valuation of a company that hasn't even started yet is absurd.
Other questions, thoughts?
Just to add to the examples, there was a recent court case that just got closed, the Elizabeth Holmes saga, where she started a blood spitting company. Called Theranos, I believe. And basically what they were promising was easier diabetic testing, just to prick your finger and you get your blood sugar. But really what was going behind the scenes is the technology wasn't there and they were just promising the world. And they raised like sacrilegious amount of money, and the company basically went under because they didn't really develop anything. And Elizabeth Holmes went to jail just recently. So that's just another example of misleading investors. Yeah,
I think the company is gonna go under soon because they have to raise so much more money to even start production. Nobody's going to want to invest in this company anymore, and the amount of money that they're going to need is very substantial.
Are investors gullible?
Yes.
And that's a question for anybody. Are they just gullible people who believe all this stuff?
I think they kind of see like the highlights, like especially it always comes back to Tesla. They see what Tesla's doing. They see the big rises that they've had in the past year or two, and they're just trying to get in early on the next one.
Yeah. Liam, you're ready to jump. Go ahead, Nick. Or Liam.
Is it possible that the former CEO and CFO face any repercussions legally, for their level of misleading them, or is it just kind of on a lower level than the other company that was mentioned?
So it did say that there were like I think I said earlier a couple lawsuits that they were going to be facing, but it didn't say if they were going to be directed towards the CFO and CEO directly.
Yeah, and definitely on that too. Even though they were non-binding, a lot of those people who did the pre-orders didn't get that perception when they were doing it, and they were still expecting the endurance to be there in September.
Yeah, it's kind of like a bait and switch. Like they thought these trucks would be ready, and then they totally changed their minds, and then no trucks are actually getting produced.
Paul, where are you? You're moving around here. Paul, you're in sales, right?
Yeah.
You've done. Have you ever? How do you approach the customer? I mean, do you throw stuff at them that you can't deliver just to get the sale?
Within reason.
Okay, what does that mean?
You can make carefully. It's all about the language you use. You know, you can have a rhetorical flourish, but you can't make misleading statements.
Okay. Do you expect the customer to be an educated customer?
You're referring to the buyer.
When you do stuff, yeah, your buyer. Well, let's start with your
customers.
Well, let's start with your customers. Do you expect them to be knowledgeable about what they're looking for and what they need?
No, most of them are not. For salespeople, it's often like you're kind of the teacher. You're explaining things. And
okay.
it clearly, in this case, Lordstown didn't take that responsibility to heart.
Okay. What about investors?
Well, Professor Boyd, to your question about are investors gullible, I wouldn't go ahead and say that all investors are not gullible, but I do think, especially since investing in the last year and a half has kind of taken this retail investor go off of PR news more so than fundamentals. That has created a little bit more gullibleness. I don't know the actual correct word, but a lot of rash decision making just based on what other people are doing and recent movements and trends more so than the quality of the underlying company and their financials, their operations, their fundamentals.
So maybe not gullible, or do you think they're greedy?
Yeah, I think a lot of people are looking for easy money. And if you believe in efficient markets, that's just not inherently possible. There are times where you can, capitalize on opportunity and profit, but I think it requires more research and a little bit more effort than simply being like, oh, Tesla was up 40% yesterday. I hope it does it again tomorrow. And like just simply looking at, Yahoo Finance and being like, oh, they were probably do it again tomorrow. It doesn't work like that.
I would say the word blinded, especially for Lordstown. I think they just kind of took the projections and nobody stopped to ask why, how would you get these projections?
I would say also easily influenced is the market today, just as social media is as well. We see people like have positions titled influencers. I think that, instead of maybe doing your own research, it's just easier to follow what the trends are, what maybe someone you heard and you trust said. And I think that is like a ripple effect where we all kind of follow in like a pattern and are very easily influenced.
That's a great way to put it, Alexis. Yeah, I think that's spot on.
Was there any audit review of any of this information before it went out? Or did the SPAC sort of just mean you didn't have to do it?
No, because like they mentioned, the people who took over when the CEO stepped down, they're like, I think we have it here. They said that their internal controls for their financial reporting were weak and that they really were poor compared to what they should have been. So they kind of just released these reports and hope nobody would take a closer look and realize that these reports are false.
Wouldn't that be the CFO's responsibility is to make sure that they were accurate?
Yeah, I think that's one of the reasons that he stepped down, because he realized that he was in the wrong and he didn't do his job to the point where he should have been, and just kind of let them go out with the misinformation in there.
maybe I missed this, but were they audited by an institution?
No.
No.
So they're doing their first when they filed their first annual return.
Mm-hmm.
So they went public in September?
No, they went public February or March of this year.
Okay, so they have not had to disclose anything at this point.
No, like I said, they've only really gotten through quarter one so far. So at the end of the year, then they'll have to
have an audit.
Mm-hmm.
Okay. Now, for those of you that
can I ask a question? So they said that it says here the disclosures made about the pre-orders were inaccurate. I'm not exactly sure what that means, because it was already acknowledged that the pre-orders were not binding. Everyone had agreed upon that. So I'm not sure where the inaccuracies were.
So the inaccuracies were, so like I mentioned, a lot of the people who did the pre-orders took the opinion that, or kind of took the perspective that it wasn't non-binding. And then really the inaccuracies were with the claims that Lordstown made with the trucks will be ready by September, and we will have all the 2,200 trucks ready by that time. And as we see, at most it's going to be 1,100, and most likely that the launch date's not going to be until 2022 now, because they haven't even started production yet.
Gotcha. I got the impression reading a few of these articles that Lordstown was trying to pass the buck and say, like, the orders that we received were not, we didn't get the sense that the customers were going to commit the money to us, but actually the problem was with the inaccurate financial communication that the company was providing.
Yeah.
Other thoughts? Gee, what do you think?
SPACs do have to get audited before they can go public. I'm not 100% sure. And then also, it's like a question for Alexis and Owen. I know SPACs are currently regulated less than a typical IPO by the SEC. Do you think that we might see some like overhaul in the way SPACs are treated in the next couple of years based on kind of what happened here and some of the other SPACs that have sent out misinformation?
Yeah, definitely. I think people are going to start to realize, and it's not just Lordstown this has happened to, it's happened to a few other ones, that they got to be regulated more closely in the beginning.
Yeah, and I think the investors will definitely be upset about this and bring a lot of attention to it.
Now, didn't I read somewhere that the CEO, and the CFO sold their stock in some stock in February that they had?
They sold it before they resigned, yeah.
Okay, did they sell it before the 54% decline?
Yeah, because it was declining, but it was before the big drop of the 19 Monday, but it's been steadily declining for a while now.
Okay, so they sold out at a higher price knowing that this was eventually going to hit the fan?
Yes.
Pretty much.
Well, that doesn't seem...
Because the huge decrease didn't happen until May.
So they made money?
Yes.
So they're probably more wealthy now than where they were.
Yes.
Was the executive compensation, do you know if it happened to be tied to some sort of like restricted stock units that vested over a period of time?
Can you repeat that? Sorry, I didn't hear you.
Sorry, do you know like how exactly the executives were compensated, if they were compensated in like stock that vested over time?
I don't know exactly, but I do know that the CEO and the CFO both had stock in the company. But no, I do not know the answer to that question.
It does bring to question where they spent all of the money that they did spend, that they originally had when they evaluated the company, because they don't have a facility. They didn't actually build any trucks, and they blew through money really fast. So that is a question we can look in towards for where the money is gone.
Yeah, I was just curious.
That would, when we do have the first 10Q, that would be an interesting question to look at, is how much was compensation paid to the executive team?
Yeah, no, I didn't see that in any of the articles. That would be definitely interesting to see.
Especially, it just comes to mind if they didn't have to disclose it to the year end and they vested at the end of Q1, they could have sold them. And then there's really like that, that 9-month period where like no one, including the SEC, would be able to check up on them.
Mm-hmm.
That's a good point.
Very interesting.
Other questions, thoughts? We got two Jonathans.
I was actually about to say, I'm currently looking at an article on CNN Business about the executives selling their stock, and it said that the CFO and this, I think it was the president, you said they both sold their stock shares in the mid-20s compared to what it's at now of about $9.
Whoa.
Yeah, they sold way before when it started to decline, they started to sell off. Whereas when it hit this, especially, I think this was last Monday, the 19% drop right after that, they both resigned. But I think especially they knew the company and their basic projections that they had in the beginning weren't going to be material, and they kind of tried to get out before. I think they both knew that they weren't going to end up being there.
So they knew in February when they sold their stock that they're not going to make that.
There would be no other reason for them to sell the stock. Being the CEO and the CFO, you think being in those positions, you would have faith in your company, or that you would believe you could turn it around. Why would you sell your stock off if you didn't think that?
Yeah. Other Jonathan.
Yeah, no, I just think this is it's all really interesting. I saw I don't know if anyone follows the stock Ocugen. It's a what's it called, a pharmaceutical company, and yeah, basically the same thing happened. They didn't get approval for their COVID vaccine. It was only approved, I think, in India, and the FDA recently said they were not going to get emergency approval, and their CEO sold most of his stock, and I think it was just kind of related to this a little bit. And the price dropped like 50%, so it's very interesting.
So that's about insiders that they're making some of these trades. The one, Jonathan, you mentioned, and then this one, insiders might have had knowledge or at least a sense of what's going on.
Mm-hmm.
Okay. And other thoughts, questions? Madison, what do you make of all of this?
I think it's pretty interesting, honestly. I was surprised that they even got the investors they got with very little evidence that they could really do anything, but it's interesting to see kind of how people can be a little gullible and just get excited about the idea of something without any evidence.
Yeah. Yeah, for sure. It'd be interesting to see if you're on the audit team for them as you go through the year. When you think about it.
Yeah, I'm actually just curious. Do you guys believe that this could be replicated with different companies, maybe in a different industry, say the financial services industry?
Yeah, I think so, because even if you think about the financials, even like PayPal is going to the moon right now. If another startup company were to start like this, I definitely could see investing early to try to get on that trend of Cash App or PayPal.
I can give you guys another example. There's a stock or a company that's going public called SentinelOne. They just released their S1. They're like lighting money on fire. They're burning through like $65 million a quarter in losses. And they just got a $7 billion valuation. They're anticipating their valuation is going to be around that. They're doing about 100 million in ARR, which is 100 annual recurring revenue. But with all of their investments, they're still like, losing like $65 million a quarter, yet they're going to apparently get like a $7 billion valuation. So this is a cybersecurity stock. And those stocks also have a tendency to get big valuations despite really not making any money. So it's kind of in the same vein, but they have revenue.
Yeah, I was going to say cybersecurity, specifically, we looked into it this semester, and going back to how easily influenced a lot of new investors are, especially with COVID and like things like Reddit are picking up, cybersecurity is such a difficult thing to understand. So I think that companies that have difficult premises that they're built off of, so not a lot of people understand, first of all, finance in general, but as you get into more things like, you know, cars and then cybersecurity, they're getting overvaluated. And so it's really easy for investors to kind of get a lot of money because I think they prey on the hope of a lot of investors. So
yeah, they're evaluating on like best case scenario potential and not the realistic of the company at today's point.
Other thoughts?
Kaya, actually just building off that point, do you also think that because of like the COVID-19 pandemic, I know a lot of these companies are operating differently and a lot of the accounting firms are operating differently as well. Do you think it's possible that, you know, due to a lack of internal control from the accounting companies and the potential companies that they're auditing, that there is a chance that this information gets into the hands of someone that they may have not intended for it to get into?
I could see that. One reason definitely because as some people are remote, I did a lot of work on cybersecurity this semester. So like millions of hacks happen a minute. And it actually went up during COVID. So I could definitely see if there are people who are staying at home who worked in audit, a lot of their stuff, it's getting more unsecure, but it's still easy to break into. So I could see consumers or different competitors or whoever getting their hands on certain information, which makes it very dangerous. One, well, it could kind of be good if they're doing something shady, but if competitors or the wrong person gets their hands on it, I could see that being an issue.
Yeah, I think even staff might be able to get their hands on it too.
Exactly. Yeah. So
interesting. Keys. We haven't heard from you.
Yeah. Now, the main thing that I just found interesting was the fact how gullible the investors can be. That's pretty much the main thing that I took away from it. How just, you know, inaccuracies can convince people.
We want to believe good things.
Yeah, exactly.
We're incredibly optimists. Was anybody at that presentation we did last week on making decisions in a good mood versus a bad mood? Joe, were you there?
Yeah, I was there, Professor.
So I guess if I make a decision to invest in a stock like this, I should do it when I'm in a bad mood to be more realistic.
Yeah, you should always be very skeptical when investing in things you don't understand, and also do your due diligence. It's always like what you say, spend an hour and a half to 3 hours reading the 10K of the company that you're looking to invest in or researching. So
yeah, good point. Michael. You're on mute. Oh, there you go.
Oh, sorry about that. No, seems like the CEO was a bit fishy selling their stock and everything. I don't know. The investors seem gullible. They didn't really do much.
Yeah. Good discussion. Okay, so we'll wrap up this one. Good job. Good discussion. I think this is when, and let's look at it first from organizational behavior. This comes down to an ethics issue. Did they have enough qualified staff? If they said their internal controls weren't good, did they have enough organization to do that? Did they have the ethics? Was there proper controls from a management perspective? Then we go and look at it from a finance perspective, ask the same question, well, why did financial controls break down? But when you're looking at forecasting, and some are going to do more forecasting than others, you need to make a series of assumptions. So you're going to look at what they said and say they're going to do 2,200 units in the first year. So when you're building your forecast and hence your valuation, you start with that 20, say 2,200. And then you might say, okay, that's the best case. Business, it'd be a base case might be 1,100, and then a bear case or the worst case would be 500, say. But that affects the valuation. So you're going to make all these assumptions, but you're going to make the assumptions based on what the company is saying, what they've shown. And then on the other side, you have to evaluate the market and reasonableness of that. So that's, I think it does both of them. So good job. Anything else before we take a brief break? And who's next? Which is it Keys, Michael and Keys, are you next or are you the one after this?
I think we were the one after, but.
Okay, Madison and Taran, welcome. They're going to be talking about the global tax. So why don't we just take a brief break and come back? I think we have it scheduled for 8. So let's try to stay on that schedule so that those that if we have people coming in at 8, they don't miss 10 minutes of it. Okay. Anybody got any questions on any topic? Okay, then we'll be back in 10 minutes. For those that are staying around for more discussion on the international tax